It is September 6th, and we've got what we expected to happen. We got a bounce off support this morning. We opened lower and traded up all day, so you really had to buy in the morning time. Kind of, maybe you sold, or I don't know what you did, but so far it's holding. But what I'm worried about now is this kind of a move. The market generally isn't going to be this cute and just do this indefinitely and keep trading in this range all the way back up to wherever. It's generally not going to do that. We're either going to get a breakout of resistance, a test of the breakout, and move higher, or we're going to get a breakdown of support, a test, and a move lower. These dotted lines here that I've got, this one and this one and this one, these are Fibonacci retracements. We switch to a weekly, and you can see that I've put the Fibonacci retracements from our March low right here on the S&P 500 at 666 all the way to the high at about 1380. So all that is, these lines are the Fibonacci numbers from the bottom to the top. So if we go back to a daily, you can see that the 50% retracement line is right here at 1020, and that corresponds with this low back here from July of 2010. So what I expect to happen longer term, maybe it takes a couple months, maybe we kind of chop around here until the end of the year, but eventually I'd expect us to go back down and test this 1020 level. There's no real support that we've got. This has been violated, and this has been violated, so now the only real support that we have is back here at 1020. This is the 38% retracement, 38.2% retracement, which is a Fibonacci number, right here at 1100, and that's just short term. We haven't even gone back to test that on a longer term basis. So I expect that ultimately I don't know when, but I expect that ultimately we break down, we test, and we come back down to 1020, where I expect this should hold. QE2 was announced right here. Now that it's over, I don't think we're going to get a QE3 in the same form, so I expect this whole move up to be retraced back down to the 1020 level. So what we want to do is just keep an eye out for this low. If this low gets violated, we want to be out. You just want to avoid any of these high multiple stocks, the Amazons, okay, the Apples. We want to kind of avoid these if we do get a breakdown, but look to load back up on these if we get, which I expect we will ultimately, if we get a breakdown to the 1020 level. Until that time, all we can do is just watch this low. Once this low is violated, that's a good indication that we're going to get some more downside. Either that, or if we go back up and fail to tag this resistance line. So that will end up being some kind of a higher high, a lower high. That will be the first indication that we're going back down to break this support line. And that's what I'm looking at right now. It's not too bullish on the market right here. We can see the stochastics are rolling over. That's not good when we're down here. That means the momentum is now shifting to the downside. So we just want to be real careful right here. We may go back up to test this 50-day moving average. I'm not sure. That's the simple moving average. I can switch that to the exponential. Okay, and you can see there that this blue line, okay, the blue line right here is going to be somewhere around there. So I don't know if we'll go back up to test that or what we're going to do, but That's what I'm looking at right now is 1020. So I want to avoid getting too long into anything unless it's got a 4% yield or more. We want to avoid getting too big into anything until we find out what we're going to do here. But that's what I'm looking at longer term is 1020. Shorter term, that's it right there. Maybe we get some more upside tomorrow. We're pretty overbought short term, so we could see more downside, and we're not oversold enough to where we're going to get a bounce. Again, these stochastics, we've got the crossover. You can see what happened here when we had the crossover. We had this move. So you can see, I mean, here, this crossover, you know, we got some downside. This crossover, we got a little bit of downside. So it's not looking too good in terms of the secondary indicators, which are these stochastic indicators. But price action so far is holding to our thesis. So we want to be cautiously optimistic. But once this low is violated, then we just kind of want to move to cash and wait for a better entry point. And that's about it.